Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Brown-Forman Corporation quarterly report. Brown-Forman Corporation offers a diverse range of businesses and services that cater to various aspects of the alcohol industry. At its core, the company manufactures, distills, bottles, imports, exports, markets, and sells a variety of alcohol beverages. These products include spirits, wines, whiskey spirits, flavored liqueurs, ready-to-drink cocktails, and ready-to-pour products. The company operates under several well-known brands such as Jack Daniel's, Woodford Reserve, Old Forester, Gentleman Jack, Herradura, El Jimador, Ford's Gin, The Glendronach, Benriach, Glinglassaugh, and Slane. In addition to its product offerings, Brown-Forman Corporation also provides contract bottling services and sells used barrels, bulk whiskey, and wine. The company serves a wide range of customers, including retail customers, consumers through distributors and state governments, retailers, wholesalers, and provincial governments directly. Its operations span across multiple countries, including the United States, Germany, Australia, the United Kingdom, Canada, France, Mexico, Poland, Brazil, Turkey, and internationally. With its rich history dating back to 1870, Brown-Forman Corporation has established itself as a prominent player in the global alcohol industry. The company's services can be summarized into several key areas: product manufacturing, distillation, bottling, importation, exportation, marketing and sales, contract bottling services, sale of used barrels, bulk whiskey, and wine, provision of various types of liquor including spirits, wines, whiskey spirits, flavored liqueurs, ready-to-drink cocktails, and ready-to-pour products under several well-known brands. Brown-Forman Corp's stock price has experienced a significant drop of over 22.87% in the past year, due to a combination of factors. One major contributor was the company's weak financial results, particularly its disappointing fourth quarter fiscal 2025 earnings and outlook. The company missed analysts' estimates for both top and bottom lines, leading to an 18% decline in shares. The weakness continued into fiscal 2026, with each quarter reporting lower net sales, operating income, and diluted earnings per share compared to the previous year. Despite some reported increases in the third quarter, year-to-date figures showed a decrease in net sales and diluted earnings per share. The company's management consistently reaffirmed its full-year outlook for a low single-digit organic sales decline. Industry-wide headwinds also played a significant role in Brown-Forman's stock price drop. Weakening consumer demand and shifting preferences in the U.S. and developed international markets led to a 2.2% decline in U.S. spirits supplier sales in 2025. The company faced persistent cost inflation, product mix headwinds, and lower sales of used barrels, which impacted profit margins. Analyst downgrades also contributed to the stock price drop. Citigroup downgraded Brown-Forman's stock from neutral to sell and lowered its price target in December 2025, leading to a 5.8% decline in shares on that day. Specific operational challenges, such as the U.S.-Canada trade dispute, lower used barrel sales, and strategic restructuring initiatives also negatively impacted the company's performance. Brown-Forman Corporation market capitalization of $12 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Brown-Forman Corporation holds a significant advantage in their industry. Brown-Forman Corporation trades at a lower price-to-earnings ratio of 16 times and a higher price-to-book ratio of 3.04 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 51% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has continued buybacks despite weak revenue growth, raising questions about capital allocation priorities. The company have a dividend yield of 3.43%. The income statement shows that the company revenue have been declining annually even though operating income have been improving. Although the drop in revenue is concerning, we can tell that management have been able to reduce cost. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the given data. On the growth side, sales have increased by $48 million from 2025 to 2026, with emerging markets and ready-to-drink segments experiencing significant growth rates of 25% and 8.4%, respectively. Geographic drivers such as travel retail have also contributed to revenue growth. In contrast, revenue decline is attributed to various factors. Sales have decreased by $12 million from 2025 to 2026, with declines in U.S. and developed international markets due to the end of Korbel relationship and absence of Sonoma-Cutrer wine business. Product category drivers such as JD RTD/RTP brands and tequila have also experienced declines. Other factors that impact revenue growth or decline include currency translation adjustments, cash flow hedge adjustments, acquisitions and divestitures, and organic growth. These factors can either positively or negatively affect revenue, depending on the specific circumstances. Net income and profit margins experienced fluctuations between Q3 2025 and YTD 2026. In Q3 2025, net income increased to $270 million from $267 million in Q3 2026, while for the year-to-date YTD period, it decreased by $62 million from $723 million in 2025 to $661 million in 2026. Profit margins also underwent changes. Gross profit margins rose to 59.9% in Q3 2025 from 58.8% in Q3 2026, but declined to 59.4% for YTD 2025 compared to 60% in YTD 2026. Operating income margins improved to 27% in Q3 2025 from 26.2% in Q3 2026, yet decreased to 29.4% for YTD 2025 from 30.7% in YTD 2026. The reasons behind these changes are attributed to several factors. Lower restructuring initiative costs and the positive effect of foreign exchange rates contributed positively to net income and profit margins. Additionally, the benefit of substitution drawback claims and lower SG and advertising expenses also played a role in the fluctuations observed between Q3 2025 and YTD 2026. The company's financial performance indicates a strong ability to generate cash from its core operations. A key indicator of this is the positive operating cash flow, which suggests that the business is generating more cash than it needs to fund its daily activities and investments. This is further supported by the specific figure provided for cash provided by operating activities, which stands at $709 million for the 9 months ended January 31, 2026. This level of cash generation is a positive sign for the company's financial health and stability. The financial performance of the company varied across different segments and regions in the recent period. On a positive note, emerging markets showed strong growth, as did travel retail, which experienced growth on both pages 24 and 28. Developed international markets also performed well, despite a decline that was partially offset by other regions. In terms of specific product segments, whiskey saw significant increases in net sales across various brands, including Rest of Whiskey 53%, Woodford Reserve 3%, Old Forester 2%, and JDTA 18%. The ready-to-drink segment also performed well, with New Mix experiencing a 37% increase. However, some regions and segments underperformed. In the United States, net sales decreased by $32 million, 7%, on page 14, while tequila segment saw a decline of $8 million, 12%. Non-branded and bulk sales plummeted by 64%. Canada also experienced negative performance for certain brands, as did Germany. Management is expressing caution regarding the company's outlook due to challenging operating conditions. The growth of the Jack Daniel's family of brands is expected to continue driving expansion, but consumer preferences are shifting towards smaller producers. Despite this, management anticipates a decline in organic net sales and operating income in the low single-digit range for fiscal 2026. The company faces macroeconomic and geopolitical uncertainties that have negatively impacted consumer confidence and discretionary spending. To address these challenges, management is focused on building long-term business through strategic initiatives such as evolving U.S. distribution, restructuring, and new product innovation. Management also highlighted its ability to meet short and long-term financial commitments through cash generated from operations and borrowings under the commercial paper program. Additionally, a share repurchase program was completed in December 2025, demonstrating confidence in the company's financial position. The company has made several strategic moves through acquisitions and divestitures to shape its portfolio and operations. In terms of acquisitions, the company has expanded its offerings with the addition of the Jin Mare brand, as well as the launches of New Mix, JDTB, and JDTW. These new additions are expected to enhance the company's product lineup and appeal to a broader customer base. On the other hand, the company has also made deliberate decisions to divest certain assets and businesses. The sale of the Brown-Forman cooperage facility and related assets is one such example, which was completed on May 1, 2025. Additionally, the company sold its Sonoma-Cutrer wine business in Q4 2024, marking another significant divestiture. The end of the Korbel relationship also took effect on June 30, 2025. These strategic moves demonstrate the company's commitment to optimizing its portfolio and operations for long-term success. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has paid out significant amounts in recent years, with -$313 million in 2025 and -$321 million in 2026. This demonstrates a commitment to returning value to investors. In addition to dividend payments, the company has also engaged in share buybacks, which have allowed it to reduce its outstanding shares and potentially boost earnings per share for remaining shareholders. The most recent share buyback in 2026 was worth -$400 million, with Class A and B shares repurchased at an average price of $28.10 and $28.48 per share respectively. Concerns about inventory buildup and supply chain disruption are emerging in various regions. In the rest of emerging markets, distributors are estimated to have increased their inventories, raising concerns about potential overstocking. Similarly, in the UAE, Woodford Reserve, and El Jimador, there is an estimated net increase in distributor inventories. Supply chain disruptions are also a concern, particularly in Canada, where American-made beverage alcohol has been absent from retail shelves for some time. This issue affects not only Canadian consumers, but also JD RTD/RTP brands, which have struggled to get their products on store shelves in most provinces. Woodford Reserve is another brand facing supply chain challenges in Canada, further exacerbating the problem of inventory buildup and potential shortages. That concludes the financial summary for Brown-Forman Corporation. Feel free to comment below, and I will be happy to answer them when possible.